back to another episode of Three Markets, the Prediction Market Traders podcast. Big week for prediction markets, Matt.
Yeah, no, lots of stuff in the news. I love all the content you've been sending me, by the way. It looks like, judging by the tweet you have up, we might be talking about some of it. So yeah, really excited to jump
Yeah.
in.
Yeah. So this guy, Adi, who's the author of the 50 Cent Dollars Substack, has been posting daily updates of the volume for each of the individual prediction markets. And it kind of feels like every other week there's a new entry into the kind of prediction market game. Obviously, Polymarket and Kalshi are still way up on top. But it kind of feels like a super cycle, dude. Like, I mean, it really does.
Yeah,
And it's not even an election. We're not even in the midst of a major election. So kind of
yeah.
wild.
I'm also curious, because I noticing crypto.com in there is interesting. I also noticed there's like an asterisk for that, whatever that might mean. Maybe I wouldn't be surprised if their data is like not public. This is CDNA Natix volume, but filtered to
To
just
just
okay.
do
I
these
see.
contracts. Interesting.
Yeah. But yeah, a lot of these are growing. And I think that like kind of we've talked about this before too about, I don't know, liquidity becomes an issue. We've seen this with like a lot of the crypto, like, two pool like exchanges when they were first coming on the scene. Like everyone was worried about all these chains and just where does the liquidity go? It just keeps getting spread out.
Right. This is like a very hot topic right now, I think, on prediction market Twitter is kind of this comparison between prediction markets and traditional sports books and what it actually means for these things to have liquidity. So the same guy, Adi, I sent you the podcast he just went on where they kind of talked a little bit about this. And it was news to me that a traditional sports book is under collateralized. They don't actually have to have the payout for every single position that people are opening. They're able to just manage their risk on their side. And sort of, it's not impossible that a traditional bookie could kind of blow up under this model as, in contrast to a prediction market where every single bet kind of, has a counterparty and there is this coincidence of wants and the two parties have kind of met at the order book. Yeah, what
Yeah.
do you think of that?
Yeah. And I also think, and you mentioned the video, the Novik video with Adi on it. And that
Let's
also brings up that discussion of like, oh, are you actually trading against another person or is there someone else at play? And by the way, shout out to this my first introduction to this channel, and I really like this video a lot. So
Yeah, let's roll the clip. I don't know if you'll be able to hear it, but I'll roll the clip anyway so we can talk about it.
So you say your counterparty isn't the exchange.
Mhm.
As a customer, how performatively angry should I be when I find out that's not true?
What?
So you said
Could you hear that?
I actually could hear it. Yeah.
Yeah. So, this guy, Big Buck Hunter of the Novig Pod, I think he's just kind of poking fun at Audi a little bit here. But to explain to our audience what I think is going on here, he's getting at the idea that, Audi has pointed out that in a prediction market, your counterparty is not, the institution. You're not trading against Caesar's Sportsbook. You're trading against kind of peer-to-peer. These are peer-to-peer markets. If I think a thing has a 40% likelihood of happening and you think it's a 60% likelihood that it doesn't happen, we're meeting in the order book. And that's kind of what creates flow and what finds a market price. As opposed to, a sports book where that isn't the case. And I think Big Buck Hunter's criticism here is, Kalshi has a huge deal with an institutional market maker, SIG, and he's kind of getting at the idea that you kind of can't say that you're not trading against the institution. You in effect are, if most of the volume is coming from a large market maker who has a large deal with the exchange, in this case, Kalshi.
Yeah, that makes a lot of sense. I think that because when I've been on like Polymarket and there would be like a market that's set up for, I don't know, like a random soccer match, or I love following and watching esports. Sometimes like esports markets would come up and it would just be like silent. There's like nothing going on there. And even though I know that I could set like, limit orders and stuff, like sometimes that kind of discourages me from even like participating. So I could see why like
Right.
maybe Kalshi is incentivized to be like, hey, how do we get more liquidity within here? But yeah, this video is like pretty eye-opening for me because I fully thought in my head, I don't know, I was like, yeah, I'm definitely trading against another person. That's why prediction markets are so much better. But as they were explaining it, I'm like, oh, this makes a ton of sense. why
Right.
they need to get liquidity somewhere.
Yeah, yeah, they do. And so it'll maybe always be it feels like prediction markets are always at a disadvantage to traditional sports books in this sense that, especially when it comes to the long tail of potential sort of prop bets, whether they're sports bets or, some other kind of political or economic event, the more niche the event, the less liquidity there kind of is, and kind of the tougher it is to actually find a market price and to actually
Yeah.
sort of, match two parties, right?
This is also making me think that, there's some advertising that like, prediction markets are available in many states, but that isn't quite the same with sports books. So I wonder how that's going to play out in terms of like someone going on, you know, Kalshi and like placing a bet on a sport, but then maybe in their state they can't go on DraftKings and do it. Oh, there it is.
Yeah. Well, did you see this story that let's see if there's a good source for this, that the Massachusetts attorney general is actually suing Kalshi for
Mm,
this, and this is just from this week too. This is from
wow,
like 6
fresh.
days ago. Um And so I think this is starting to work its way through the system. I'm pretty sure DraftKings is headquartered in Mass. So I wouldn't be shocked if, yeah, I guess maybe it helps to make sense of why this is happening there. And it also kind of feels inevitable that this kind of thing would happen.
Yeah.
I mean, if sports betting is only legal in certain states and prediction markets are able to offer a venue for close to the same thing, the mechanics, of course, are different. Um, it's interesting.
Yeah, it tells us that prediction markets are here to stay, I guess. They're getting enough
Yeah.
attention to like have a lot of this, so
Right, we'll definitely track how this case progresses. The other person who chimed in on this entire kind of market structure conversation between sports books and
oh, I read this,
prediction
yeah.
is the co-founder of Kalshi herself, I believe, Sarah Slane, um, with an absolute wall of text on Twitter. I don't know if you read this whole thing, but
I did
like,
actually, yeah.
yeah, the notion that market makers, which are the backbone of all financial markets, somehow make exchanges similar to sports books is false, even in its most generous interpretation. For those of you not wanting to read an entire thread, TLDR, on a sports book, there is a single centralized entity, the house, setting prices for the entire market. On an exchange, prices are created from an amalgamation of thousands of bids and asks from thousands of entities. Market makers, including KT, compete for flow in an open, transparent, and fair marketplace and set their own prices as to what they are willing to pay for a contract. They are not able to dictate the broader market beyond that. Sort of just defending, almost defending against that idea that how performatively angry should I be when I find out that it's not the case that I'm trading peer to peer.
Yeah,
And
yeah.
then the debate kind of continued. Like, I'll just go to the source of this thread. Audie put up a X poll asking, would you consider the stock market peer to peer? And 54.9, of course, in the context, I think, of this broader conversation, the poll
Mhm.
result came in as no. And it is an interesting question that kind of makes you consider this entire, larger issue. And then the quote tweet of this was, the answer to this question is, of course. And in the case of NASDAQ, I can tell you when it became so. In 97, 98, ECNs were granted access to the inside market. Prior, NASDAQ was a negotiated broker-to-broker market. If any such everyone has access to close the spread, it's P2P. Fair, fair, I mean, in a traditional sports book,
Maybe.
you don't have access to close the spread, right?
I don't know. It's probably a bad analogy, but like in video games, if you play against someone who coded up a bot and is like, able to just perform far better than you, is that peer to peer? No, they'd consider that cheating and saying like, I'm not actually playing against another human. In this case, like hedge funds versus retail, like it's tough to get an edge as retail.
Well, sure, but I think it's also a question of whether or not there's like gated access to being on the other side of a trade, right? Like
Sure. Okay.
you
Yeah.
like, cannot be on the other side of a sports book trade. You might be in effect on
Yeah.
the other side of the trade because of how they manage their risk. But if you're coding up a bot that is taking the other side, there's at least still this like order book where folks are meeting,
Makes
right?
sense. Yeah, it's just different approaches and strategies. Vibes guy fighting against robot.
Yeah, and Audie's response to this is market pill take. I just love hearing old timers opening. Yeah, we've seen this before. Can't wait to be the unc who has some shit. I kind of already feel that way sometimes. Um,
That's funny.
like we saw, I think the take here is in response to this person saying, we saw the stock market break into P2P land from broker to broker land. And now effectively we are breaking open the sports books into peer-to-peer land from kind of broker to broker or like sports book bookie to peer land, you know?
Very interesting.
Yeah. Okay, let's get into your first market, bro. What have you brought to me today?
Alrighty. First market I got here for us is Cardi B having a #1 album this year. Cardi B's about to release her sophomore album. It's been what, 7 years? A 7-year gap since she's released an album.
That's it.
And that they put something out saying, will she hit a #1 album? I think the reason why I was interested in this market is I actually don't know what it means for like an album or like a song to be like #1 with all these different like billboards and
Right.
charts and all of that. So if anything, this was more of an exercise for me to like think about, okay, what is the definition of it? What are the criteria that needs to be met? So when looking at the rules, the outcome is Cardi B needs to have a #1 album on the Billboard 200 by December 27th, 2025. And there's Billboard Hot 100, there's like Billboard Top 100. There's like so many different ways of slicing this, but at the end of the day, for this one, what it just looks at is looking at like album consumption between now and the end of the year, and this looks at week to week consumption of whether or not it hits like #1 as the top album. So Cardi B is going to launch her album this Friday, and I keep saying launch, release her album this Friday, and uh then from Friday onto the next, that's like a full week that the Billboard 200 will look at. We'll see what sales look like and whether or not she will be #1. I actually think this market is reasonably priced. Yeah, so right now what you're showing is like all the different charts and stuff. So I believe this one is the Billboard 200
This is
for
this week. This is the live chart, right?
this is the live chart. Yeah, this is it. So the idea is like, will Cardi B on when she releases her album hit #1 at any week within any week from now until December? Her best shot, from my opinion, uneducated opinion, because again I don't know anything about anything with this, is that she really only has this week, and then you have a bunch of other albums in Q4 and holidays that are coming up. So think like Taylor Swift's releasing a new album not too
Right.
far from that. You might
Good
have
luck.
some big artist that drops an album, or as a surprise drop. That one's less likely, but you never know. Um, but yeah, there's a few like bullish and bearish signals that I can go through. But to kind of go back to this, like how this is tracked, if you click on the third tab here, there is these kind of equivalents of or a way of measuring what like an album sale looks like, when it comes to streams versus like album purchases and stuff, and they kind of normalize everything, and that's what feeds into this Billboard 200. So like a stream from like a paid subscriber of a service like Spotify is going to be like some exact value, or some exact ratio to like one album consumption. They even break it down to like not just streams. If you're subscribed to the service and streaming it, that's a different numerator or different number than if you're listening to an ad supported version of it. So if you're on like YouTube
Right.
and there's like ads, there's just like a different accounting there. It feels obvious like explaining it now, but to me this was just like very interesting. I'm curious to hear if you've had any thoughts and opinions on this when it comes to music countdown.
Yeah, it's an interesting market. It looks like it's up a lot this week. Can you explain why it's up so hard this week?
Yeah, I think that within this week, she's been doing a lot of promotional stuff relating to her tour. Like she's like kind of
Hmm.
doing the rounds of saying I'm touring in 2026. I believe there was like some more information about who's going to be on the album. So if you go to the last tab here, there's a track. Let me scroll down a little bit more. There's going to be an image. There it is. That shows the actual track list and those who are on it. So we have Selena Gomez, we have Kehlani, Lizzo, Summer Walker. Like you got a lot of
Lot
Janet
of
Jackson,
features. Lot of
a lot of
features.
features. Yeah, and that plays. I think. I mean, I haven't done the homework at all, but I would think that helps a ton with like
Right,
getting
right. So
people to
what time
#1.
did she put out the track list? Do you know? It looks like this was today or earlier this week.
Yeah,
Um,
let's see
I
if we
saw
can
it
look
on
at
here.
that. Um, checking. Oh yeah, okay. So yeah, when looking at that image, she posted that on her Instagram 7 hours ago. So we can
7 hours.
actually see how this is. I mean, honestly, not that much from.
Right. Not that big of a move post track list, but a much bigger move earlier in the week. Did she just announce the album earlier in the week, or you think it's just promotion?
I think it might just be promotion. I mean, that's something to do more homework on for sure. Oh, I see. It looks like she announced the tour 2 days ago. But again, yeah, it's been a longer time frame that we see this run up that you're looking at.
Right.
But yeah, I think to kind of close out a little bit some of the things that I've noticed in terms of like, so I think the market's reasonably priced um in terms of her having a number one album within the year. She's not competing with
I
any other
disagree.
release.
I think this
You
is so
disagree?
high.
Oh, okay. I would love to hear.
75%? Oh my gosh, you'll pay me what, 3-1 to take the argument that Cardi won't have a number one album? What is LW? Do you
Last week.
know? Last week. Okay, so this is where it was last week, how it peaked on the chart, and how many weeks it has been on the chart.
Yes.
Right. Interesting. The data I think we're missing that we would want to pull is what's the longest a single album has stayed at the top of the chart? Because to your point, for Cardi to have a number one this year, she has some fierce competition, right? There are other kind of heavily anticipated albums dropping. I wouldn't be shocked if someone like Taylor Swift was able to dominate that number one spot for however many weeks on end, right? Kind of consecutive weeks, and Cardi could only ever,
All you need. So yeah, all you need for this market is 1 week to be at number one. You don't have to
right,
stay at one for like a long period of time. And I think that's why like when her album's releasing, there really isn't that much out there that would get people to stream. So if you scroll down a little bit more, I actually saw Morgan Wallen's album One Thing at a Time, 132 weeks that it's been on there. Long time. It's number 7.
yeah, very long
I
time.
peaked at 1 last week, is at 6, but it was like hovering around within here for a very long time. So we have all the way up until the end of December. Q4 is the part. What the bet is like on Cardi B, when Cardi B releases the album up until like the start of Q4, when you start getting like the Taylor Swifts and like other people, like the holidays start coming around, other albums start coming up. So it's kind of a tighter window, but I do think that she'll be able to get there.
Yeah, when is her release date?
Friday.
Interesting. So there are, I mean, yeah, there's how many weeks left? There's 2, 4, it's like 14 weeks left in the year or something.
Yeah.
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 Interesting.
But yeah, some of the bearish signals, there's
14
one
at
signal
that.
too. Yeah, one signal too that might be like it's either bearish or bullish. I think it's up to the person. Is that it's been 7 years. She's had her first
Right.
album that she dropped. It was a huge hit, just crushed a bunch of charts. Had a few songs that went like number one. People loved it, and then
Right.
it's been 7 years. That's either a great thing that's just gonna pop off
Right.
this
That's
album.
either adding anticipation, or she has
fallen off.
Become less relevant.
Yep.
Right.
Yep. So yeah, I mean, if you want to take the other side of that, maybe we do a little side bet outside of the Kalshi streets. But
right. Well, I think there's a lot I would want to look at before taking a position. Like you're right, 75% might be appropriately priced. I think I would want to see how her other albums debuted.
only one. She's only had one album before.
She's only ever had one album.
Mm-hmm.
Interesting. Did it debut at number one, or did it peak at number one?
Yes,
Probably.
definitely did. Yeah,
Probably.
and I had a lot of songs that like crushed it as well.
But then also looking at what other heavily anticipated albums are coming down, and what the kind of like average time for a really heavily anticipated album to sit at number one is, and take a very like, there's just so much data that already exists that you could roll into this. But my instinct is that 75 does feel high. That is my instinct. For
Interesting. Sure. Yeah. I mean, all she needs is 1 week. It's releasing on a Friday. It's the weekend. I want to be blasting some Cardi, making sure that this yes position pays off.
Oh, here's a good one to chat about. So you've probably seen these Polymarket markets. For some reason, the number of Elon Musk tweets is just like one of the highest volume sort of prop bets on Polymarket. I mean, they've had these for a while, presumably because the guy kind of shit posts a lot. There were weeks where, he would just post. I mean, $320,000 is decent volume, I think, for a niche market like this.
Yeah.
Right. But the reason I wanted to talk about it was actually something I saw on Twitter, on Prediction Market Twitter here. The user Allocator writes, "How I found my top Polymarket quant." I think I sent this to you, Matthew.
Yes.
One summer, I recruited 10 of the best fresh CS graduates for a summer internship at my prop firm. To decide who would eventually join us full-time, I needed an assignment that would test not only coding ability, but also algorithmic thinking and the quant mindset we value most. I walked into the room. The interns were silent. First professional internship, pressure in the air. I broke the silence with a single question. How many tweets will Elon Musk tweet next week? They looked confused, unsure if it was a joke or a trick. You have 3 months to answer this question, I continued. We will put $2,000 into each of your algorithms. Whoever makes the most money during week 12 of your internship will get a job at the firm. The beauty of the question was its depth. You could simply forecast the number, or you could build a trading strategy that shifted positions in real time as the week unfolded and probabilities changed. And the real edge lay in how many parameters one could imagine, engineer, and connect. Most interns went the standard route, profit-based models with customizations. And I don't actually know what that means. I don't
Profit
know
is
if you-
a forecasting like library, so it's like you probably got some like historical data, and then like
Right.
if it's the same profit that I'm thinking of, but there is like
Totally.
a forecasting library that a lot of people use.
Fascinating. So I presume that library is entirely taking this kind of frequentist approach of
Yep.
looking backwards at how many tweets Elon has kind of done and whether or not there's maybe some momentum toward or some sort of pattern just entirely only in the cadence of tweets. But you're really only looking at a single, input variable then, right? Like there's a time series of how often he has tweeted and perhaps whether or not that's now, going up or not. Instead, Allocator writes for the intern he selected. One stood out. He built a custom data pipeline that integrated sentiment analysis of Musk's tweets and how mood correlated with tweet frequency, time zones and sleep patterns affecting late night / early morning tweet bursts, personal life events, holidays and seasonal effects, corporate activity, earnings cycles and company news, and social sentiment toward Musk. All linked back to historic tweet counts per month, week, day, hour, even minute. Lots of noise, of course, but plenty of alpha too. The model was great, far beyond anything the others produced. On-chain execution ensured low latency reshuffling in real time, constantly arbitraging our forecasted probabilities against the market's odds. And that, ladies and gentlemen, is how I met my top Polymarket quant, the one now running arbitrage and directional strategies for our firm. Wild story.
That's
right?
really
I don't
wild.
even. I mean, one has to wonder how real this story is, but it's such a good story.
Yeah, I
know?
think it's pretty real, honestly. I think that's actually a great project for other like either current data scientists or like aspiring data scientists to be like, there's all these like markets that are here that you can test in real time in terms of like what prediction looks like. I mean, you have sites like Kaggle and stuff where you can do some kind of like forecasting or prediction, but this is like in practice, real time. How do you like predict some of these things? And yeah, I think some of the features that they use, you could use that for like anything with it's like whether it's predicting these tweets or maybe predicting a sporting event or something. There's just a lot of features that people don't consider when adding it to their models. This is really cool.
And in this case, it is an example of like a very stochastic, process of Elon Musk tweeting. It's like we would assume, I don't know if I'm using stochastic entirely correctly, but we would assume that there is some underlying rhyme or reason to Elon tweeting, but we don't actually know what the underlying rhyme or reason is, right? There's so much noise and there's so many unidentified variables that there is sort of, a predictability to flesh out there. But on the face of it, it feels entirely random. It seems like a thing that's entirely random. I think it's a good example of a market that, to a layperson just looks like gambling. You see, prediction market for Elon Musk number of tweets in September. It's like, we're really gambling on how many times Elon will tweet. Then you read Allocator's post and you're like, oh shit, this is like, yeah, people are doing real kind of data analysis and sort of like stochastic process modeling in order to flesh out like things Elon might not even know about himself in terms of whether or not he will tweet. It's a fascinating kind of exercise in prediction, right?
Yeah, definitely. I think with some of these markets too, it's like, it can also be, it's also kind of trippy to think about that, one person, like what happens if like someone sees this market that's made of them? I think there's already been discussions around like Mr. Beast like markets and stuff, which we might talk about later on in
Totally.
future episodes, or maybe in this episode if you selected that as a market.
I
And
did. I
you
did.
did? Did you really?
Yeah. Yeah. We're
No
getting.
way. Okay,
We
I
have
almost
to. We
want to
have to talk about
skip
it.
to that at some point. I mean, yeah, we'll kind of go back and forth, but that's funny. Okay, maybe I'll save whatever thoughts that I have for the Mr. Beast market.
Right, right. The teaser here being, to what degree will actors, especially solo actors like an Elon Musk or a Mr. Beast,
Mhm.
at some point attempt to influence the reality of a niche market, like the number of times Elon Musk will tweet or what will Mr. Beast say in his next video. As opposed, I think, to really large kind of macro societal or macroeconomic events like who will win the presidential election. There's a ton of volume in there. It's a very it's a system with a lot of different inputs and stuff. There's not a single actor who can just single-handedly influence the outcome of that market. And I do think there's quite a lot of conversation right now around what is the risk, or how are people even thinking about the input variable, the likelihood that an individual could influence a market in which they are implicated, right?
Yeah, and I think
Uh,
over time we're probably going to see like maybe the phasing out of like these kinds of markets where it might be like a relic of the past of like, oh, remember you could like do a prediction market on one person doing a thing, and in hindsight it would be like, oh man, someone could easily like impact it. I could see
right.
these kind of slowly being less popular, not going away, but like being less popular compared to other ones, since this is so like, kind of a not that Nova
It could
space,
be.
but
It
yeah.
could be the case. I think instead, though, that a robust prediction market trader will build into their probabilistic model the likelihood that an individual is paying attention to a market in which they're implicated and would, have the morals, shall we say, to attempt to influence that market. And that simply becomes a part, like it's almost like the level 2 metagame of, okay, now you actually have to think about,
Mm.
is Elon, has Elon indicated that he looks at Polymarket? Has Elon indicated that, is Elon's net worth such that it would ever make sense for him to try to influence a $320,000 volume market on his likelihood of tweeting?
Yeah.
It just becomes very meta, doesn't it?
Yeah. It also gives me the idea too, realizing that maybe these won't go the other side. Taking the other side of it, with them not going away, is that I'm sure some people are using these markets as parameters for other models for things like SpaceX earnings or something like that, right? Like,
Right,
is there an impact between the amount of times he tweets versus like maybe other products or things that are affiliated with him? Why not
right,
have the market itself be a parameter in a model for something else? That'd be
right.
interesting.
Yeah, fascinating. Is there some sort of correlation between how many times Elon has tweeted and some of these other things like Tesla earnings or something? Yeah, very interesting thought. Okay, I'm excited to talk about the Mr. Beast market, but let's get into your next market.
Sure.
Uh,
Here it is. Yeah. Cool.
oh,
So, this one is Gemini 3.0, released by dot dot dot. We see September 30th at 6%, and October 31st at 44%. Part of the rules of this market is that it needs to say 3.0, 3 point something in its model. If it's a 2.8, 2.7, that doesn't count. So even if it was like 3.0 Pro, it doesn't have to be exact, and it has to. People are, you know, trying to predict if it releases by October 31st. So some of the first questions that I had when going into it was like, what are even the naming conventions of some of these? And didn't
right,
really get much signal, honestly, on that. Like, other than, yeah, Frequentist approach, looking at historical data, we saw like, it took a couple years from going to 1 to 2, and then from 2 to 2.5 it was about like 6 months or so. um why the rush with naming some of these things, I don't know, but the reason why I think that no is still pretty valid. Okay, well, I should have said not financial advice, this is for entertainment purposes only, but I'm going to mention that like no is interesting um because of the fact that Google is starting to integrate a lot of their Gemini into like a bunch of stuff, whether it's like their browser or like other Google products. And I don't know, I this might be a very simple guess, but I feel like deeper integration makes it a little bit difficult to kind of like move fast like this. But again, I guess you could just release 3.0 and not have to like upgrade all the other products that are using Gemini. I don't know. I'm curious to hear your thoughts.
Well,
And we use
I think it's the case that these things are built in a way where you just swap out the model,
Mhm.
right? I think there is a team in whatever they're called, DeepMind or something,
Mhm.
building just the models, and then the product teams are basically API calling the models, I think, for certain functionality, and they might have some scaffolding built around that. But I don't think that the, like, product complexity would cause them to delay
Well,
a
yeah, I
gen.
think the integration would be simple, but I do think that there's still like a lot of considerations around like there has to be a lot of experimentation that's ran. Like, what does the behavior of like, I don't know, Gemini inside Android Auto or something like if we swap out the model, there's probably some regressions that happen, some improvements. Like there's just a lot that you have to kind of consider before that. And even before integrating into products, like they probably have some version of this now. That they're continuously like experimenting on. But for me, the thing I was hung up on is like the name. Like, does it need to be 3.0? What if they
Right.
release it as 2.6 or something?
Yeah, it's
Um,
not just their next release. It has to be their next, major release such that they would name it Gemini 3.0. I think this is kind of alluding to kind of everything that went down with ChatGPT 5. And then
yeah,
I think there was a moment where 4.0 was going to be 5, but there was too much hype built around the 5 name. There was too much Twitter hype of GPT-5 being AGI or something.
yeah. I mean, Nano Banana is a great name already. You know, and this next tweet, yeah. So there's some people who are like speculating on like, okay, on Ella Marina, which is a website you can go to see the leaderboards of different language models, both proprietary and open source. There sometimes when people launch like stealth models, they have these like code names, and then people like speculate like, oh, this must be like OpenAI's like test model here, or like Meta's new version of Llama. Um, so yeah, this is some speculation here on whether or not some of the things showing up on LM Arena are Gemini in particular.
Are there rumors? So this, I guess, is a rumored Gemini 3 launch.
A rumored Gemini upgrade. Is it 3.0? I don't know. But like you said, there's like two different components to this. Are they releasing a new model? And on top of that, are they naming it 3.0?
Right, right.
Yeah.
And 2.5 was a large launch,
Pretty
but
big.
of course, you reserve the 1.0, 2.0, 3.0 for only the largest of launches. So do we think that they would do such a large launch by October 31st? I mean, they basically have less than a month and a half, and this trades at close to 50-50.
I would say no on this.
It
I
feels
mean,
high.
it feels
It
pretty
feels
high, right? Like that's what I thought. I mean, we saw Nano Banana. I love saying that name release, and that wasn't like a numbered release. For all we know, they end up not naming it by numbers anymore because, like you said, there's a lot of anticipation there to go from 2.5 to 3.
Yeah.
Yeah,
So this user in the comments is saying 3.0 is on LM Arena.
well,
And that's confirmed here?
no, yeah, that's the speculation, right? Because sometimes it'll be code names. Like no one actually knows. Like you might see like a code name model that's like performing insanely well, and it's like, oh, it's got to be one of these big shops, right? That are like doing this. Is it Gemini? Is it someone else? I don't know, but people just people will speculate there.
Can we look at the
Yeah,
LM Arena
let's do it.
leaderboard really quick?
Leaderboard overview. Cool. So right now what we're looking at is a leaderboard between different categories of like text, web dev, etc. And we see a list of these names. I wonder if we can see like um some example of like a secret launch. I don't know what GLM 4.5 is on the right hand side, where at number 5, it's like tied between Cloud Opus 4. Yeah, what is that? Like this could be one of those. Oh, actually, it does look like this is a.
Yeah,
Yeah.
I don't know. Is this just fake news that this user is saying that 3.0 Flash is on LM Arena? Do these companies release their models to LM Arena for benchmarking before they publicly release them?
If they did, then it would be like code name. They don't have to actually like give a name.
Interesting. Okay,
Yeah,
but so also if they did, we would expect it to be performing incredibly well, close to the
probably.
top. We would
Yeah,
certainly expect it to be outperforming 2.5.
yeah.
And there's not a model on here outperforming 2.5. And why would they release a 3.0 that doesn't outperform 2.5 Pro? So I think this is a literal fake news comment that
Yeah,
it's
I mean
on
they do have
Allen.
1.5K on yes, so I could see why they're pushing for that. And yeah, and some of the other tabs that I have listed here are just like them or the different examples of like Google adding Gemini to Chrome to
Different
prevent like
products, right?
antitrust. So like there's probably more energy focused around like how do we just like integrate it in a bunch of stuff? Oh yeah, and this article is just a silly one around like how they even came up with the name. I guess it was like translates to twins in astronomy, and they go into this like deep dive as to what the twin. I don't know. I actually didn't read it. It seemed interesting, but yeah.
Because my immediate instinct is just to look at what has the period of time between major releases for Gemini been. Gemini 1.0, Gemini 2.0, perhaps 2.5. And then what is the major pacing of, a lab like OpenAI been, or what is the pacing of Anthropic been for these major releases? And perhaps that indicates how long it takes to train a model, and perhaps that tells us something about whether Google has wrapped up training for 3.0 or not. And what I'm describing kind of is the frequentist approach, in contrast to the Bayesian approach, where you are kind of, looking into the world and sort of updating your forecasts. Can you explain more succinctly this kind of contrast in these two different
maybe for this example in particular? So yeah, you just explained the frequentist one really well, and maybe for like a Bayesian approach, you could say like, let me watch a bunch of videos on people talking about the naming of these models. Like, why do they name it a certain way? And when you're watching that, you kind of like give, some kind of like your best guess at the likelihood that they're going to update this from 2.5 to 3.0 in naming based off of like what you learned. That's like the simplest way of approaching it with the Bayesian model. And then what you could do is using like different distributions, you can add like parameters that represent your like assumption for it, and then run simulations against it. I'm kind of like really oversimplifying it, but it actually might be a really good episode topic for another time of like, let's pick a model and like go from a frequentist versus like a Bayesian approach, or combining the two as well. But that's probably what the approach that I would take, where like I would actually ignore like all of the stuff with like, not ignore it, but I would factor it in with a grain of salt in terms of the time it takes between releases. I think with Moore's law and stuff, it's like this could be releasing faster than we would have ever expected. But then again, so we're kind of hitting a ceiling with language models. And then I would just kind of put a lot of weight, honestly, on the naming of like, when would they name, why would they name it 3.0, and then use that as like my
right. The fundamental difference here being like, kind of, are you backwards looking at patterns, historic patterns, and then simply extrapolating forward the likelihood of a thing happening and when, versus what you're describing is, I'm starting with a probabilistic kind of assumption or a prior for this event happening. And then I am looking at what's happening in the world, looking at naming conventions, looking at product complexity, and updating my priors to, build a predictive forecast, but one that's not just based on like a historical analysis of historical data, right?
Yeah. So let's say, for example, news is released that the head of DeepMind just quit. Right, like that's got to factor in somehow to this, right? And like, you're not going to have historical data on what that might look like, and if there is anything, it's going to be very sparse. So you kind of have to like make a best guess based off of your like the limited information you have, and then maybe even factor in some kind of confidence level within that, being like, I think it's this percentage impact, but my confidence is really low, and then we kind of go from there.
Totally. Let's get into our next market take. I think I have some stuff here. Okay, this is a doozy of a convo. Have you heard of this guy, Semi?
No, I've not.
Okay, so I encountered this guy, Semi, from Polymarket's excellent newsletter, The Oracle. And I know you read some of these because you send me them all the time. So they profiled Semi a couple months ago, earlier in the summer. And they started this profile by saying, Semi deposited $286 on Polymarket in June 2024. Since then, this reclusive trader who uses a default Discord profile picture and has just 215 followers on X ran his P&L up over $1 million. If we check in on Semi's P&L now,
wow.
Sorry, is that Semi? We'll check on the profile that they're actually linking us to. Yeah, at the moment, their all-time P&L is a little over 400K, but their position size alone is over $1 million.
Yeah.
So certainly, I think this person qualifies as a Polymarket whale. An excellent little profile in the Oracle. And when they touch on like, walk me through your strategy, the sort of TLDR of Semi's strategy is he kind of gets at it here. In most areas, if you just reverse stupidity, you're not necessarily smart. But in betting, if you're reversing stupidity, you kind of are becoming smart, which I think is a hilarious way to describe what kind of winds up being Semi strategy. And it's a strategy that I think is being discussed a little more on in like prediction market circles right now, which is to say that there's a sensationalism bias toward dramatic headlines. Such that people kind of overprescribe the likelihood of a thing happening, and that there is a sort of like just strong bias, call it a betting bias or call it a sensationalism bias. And Semi's strategy of, reversing stupidity is basically to take the opposite side of those trades that feel overbought for the likelihood of a yes.
Mhm.
So I'll just touch on a couple other areas where I've sort of seen this discussed. One is, a Twitter article by this user, Fabiano.sol. And Fabiano.sol at the very end, the whole article is well worth the read. But at the very end, one of the strategies that they touch on is they say retail tends to overbet on wishful outcomes. So there it is again, like wishful outcomes. Fading retail sentiment, especially when odds get skewed by emotion, can give you an edge. Indeed, only 22% of markets resolve as yes. A good strategy can be buying no early in a 90-10 market, because odds often shift to 95.5 over time as people who originally bet on a sensational, wishful outcome start cashing out at a loss, and that's when your no position gains value. So this is like one example, I think, of a trade strategy that relies on sort of correcting the sensationalism bias. And the most interesting conversations of this, I think, have pointed to this excellent Dune Dash. I'm sure
Oh,
you've seen
yeah,
it.
I've seen this. Yeah, exploring it.
Yeah, an excellent Dune Dash that talks about how accurate is Polymarket and kind of looks at the likelihood that, markets resolve the way that the market is predicting at different time intervals. But the author of this Dune Dash, Alex McCullough, shares down in the Dune here a few potential causes of bias in prediction markets, including acquiescence bias. People tend to answer yes more frequently when uncertain. This may lead polymarket users to subconsciously revert to yes bets rather than no bets, as there is less mental friction. Herd mentality, when a market is trending positively in the direction that a participant wants. Low liquidity, and degen theory, aka mispricing of risk. The Alex writes, my personal hunch is that this space is full of degens who are more interested in long odds with potentially bigger returns rather than a small return that is closer to a sure thing.
I think you can measure that. So actually, let's out there. Actually, so degen theory, like mispricing of risk, you could probably look at with Dune how many users are one, the majority of their purchases are yes, and two, at what odds are they like purchasing at? You'd have to have some heuristic or threshold that you set of like what you'd consider to be degen, right? Maybe anything below like 20%. And you could actually probably see like the population of those users on any given day. And I would actually be interested in seeing if over time, as adoption increase, that goes up, or if that
Right.
goes down. Yeah. Sorry, I just got
Totally.
really excited about that. It's a really good theory.
Yeah, it's a very good idea. It's a good piece of homework probably for us to look at.
Mm-hmm.
I think as I look at this closer too, it's like actually this degen bias sort of would cancel out or otherwise like respond to this kind of sensationalism bias or the acquiescence bias, as Alex is calling it, where um if we're assuming that people are overbuying the yes, but a yes is trading at, let's say, 90 cents, actually the degen bias would be people kind of looking for the asymmetric return and buying the 10-cent side of that. The sort of better's bias could kind of correct some of these markets that are inappropriately priced toward yes back into kind of no territory, right? Do I have that right?
I think so. Yeah.
And where the last bit that I saw that kind of pointed to just a similar conversation was, this Twitter user, Andrew Lenardi, who has a sort of series of tweets the past couple of weeks on his just bet no strategy. So he's actually been kind of like living this out and saying trades are overall profitable. Here's his winning no trades, no for U.S. Civil War in 2025, no for Gavin Newsom launching a token in September. Is it true that I thought he did launch a token in September?
I
Or he
don't
talked
know.
no for just a number of other markets. And so I mean, this person even asks, do you pick markets? Do you have a personal bias for no? And
That's
he says,
interesting.
I tend to try and dismiss any bias of the result. My main bet is that there is a short-term overestimation of yes, and that you could just buy the entire market index of all markets, and all you're doing is betting on no's.
That's very interesting. Part of me makes me think, like, does that, I mean, I haven't thought this through, but like, does that mean that the market, if most markets are resolving to no, does that mean these aren't good markets? Like, is there more room for better market? Like, do we, like, is it expected that there should be a 50-50 split between markets that resolve to yes or no? Or is this just how, like, events take place? Like, I wanna know what, like, the ideal situation is, if there even is one, but something that I'll probably think about more after this.
Yeah, I mean, this probably tells us like something about society, right? Like the idea, I think, being a lot of markets that are stood up on Kalshi and Polymarket tend to be things that are in the news or events that are being speculated on. In some sense, though, the current like default position is that the thing has not happened and is unlikely to happen unless there is some trigger, like an election, of course, is a trigger where something has to happen. But taking the no is sort of
It's
yeah, I mean, I
admitting
think
that
it's
reality.
also that yeah, we're over sensationalizing things, and most maybe of what would be discussed or assessed kind of, by cultural commentators is just not going to happen.
Yeah.
Or that there's so many alternatives. I don't know. I don't have a good
That's
framework for
actually,
thinking.
no, I like that a lot, because it's kind of like, maybe most of the questions that humans ask, like, especially when it comes to forecasting, is that it's just not going to happen. And that's kind of what you were just describing. But like, yeah, so I guess the next time we're panicking and thinking, is the world's going to end? It's like, probably no. Um, or any of these other major events. So yeah, really interesting. Okay.
Yeah, I mean, I don't know if you've encountered the nothing ever happens kind of like meme,
Oh
but
yeah, we gotta pull that up.
I'm seeing this all over the place now.
Nothing ever happens.
There's even a
The
nothing ever
poly.
happened. There's a Polymarket. Here's a tweet. I have no idea what the nothing ever happens meme means or is meant to refer to. Things clearly do happen. It is supposed to refer to the times when something big looks like it may happen and it ends up being a nothing burger. And I do think, for those of us who follow like the news and, the culture closely, this is just true. People seem to
Yeah,
get really worked up about a thing, and then more often than not, kind of nothing ever happens, right?
very interesting.
Certainly more we can look at in terms of like, insights to be made, I think, from this
Mhm.
accuracy dashboard. I thought that was pretty fantastic.
Yeah.
Uh,
What was
let's
that dashboard author's name? Shout out to them. Alex
Yeah,
McCullough.
Alex McCullough.
Shout out. Great dashboard.
Yeah, I need to dig even deeper into this. Let's get Alex on the pod. Yeah.
Let's get Alex on the pod.
Get Alex on the pod. Okay, let's take it to your next market.
Cool. Alrighty. So the title of this market is 2025, September 1st, 2nd. 2025 of September. The 1st, 2nd, 3rd hottest on record. So, you know, global warming, temperatures rising. I don't really have that much information on like forecasting like weather stuff. I think we talked about this before, how like I played my first like kind of playing around with Polymarket. Some of it was like predicting weather stuff, and I realized how insanely hard it is. And when attempting to do research for it, it's like, oh, there's like, I mean, yeah, it's an entire discipline and study to help predict like
Right.
what the weather
The
might look like in a
meteorologists are
country.
the OG prediction market traders, bro. It's taking the entire
Actually,
these models.
and we actually have it, no matter how much computing power we have. It's just that we're not even getting that close to predicting things like earthquakes and stuff, which might be a market I pick in the future. But yeah, so again, similar to the Cardi B one, I was curious to learn more about like just temperature measurement, and this was like a vehicle for that. And also for anyone listening, like there's some topics on here where maybe you look at the market and you say, I'm not going to look at that because I know nothing about it. I'd actually encourage you to do the opposite, because you actually learn a ton about just things that you otherwise wouldn't come across. Like, I don't think about the weather other than if I need to take my umbrella outside. And I think this was like a helpful market for me to put into context. So like, oh, the earth is like heating up, and there's a data to back it, and there's people who are attempting to kind of forecast it. So right now you're looking at the rules section of it, where So the actual how it's measured or how this market is resolved is that they're looking at NASA's Global Land Ocean Temperature Index for the month of September, and I believe it releases on like it's a month lag. So I think next month we're going to see the September data.
Yeah.
And if you click that link, it's just like a text file coming straight from NASA's website. And what they're doing here is that they have a base period between 1951 and 1990 of like average global temperatures. So this is not just the US, this is not a specific part of land, this is literally the entire globe. And they use between 1951 and 1990 as like the base average. And each of these columns are deltas between that in terms of degrees Celsius. And I think if you scroll all the way down, it mentions that like if you multiply or divide it by 100, that's like the actual, yeah, divide by 100 to get changes in degrees Celsius. And then you can do some conversions to Fahrenheit. So at the very bottom, you see where it says like 2024, 2025 with the asterisk for September. So if you scroll to the right, it's a little tough to read. Yeah, there you go. You'll see some asterisks for the month of September. And if you go upwards of it, we see 123, 148. And you could read that as 1.48 degrees Celsius increase relative to the 1951 and 1980 time period. So already into 2023, we had the absolute hottest month of September. And then we see 123 for 2024. And what the market is asking is, will this be the third hottest month or the second or first? And if there's ties, it goes up to that tie. Yeah. I've been
So is 2023, or excuse me, yeah, I guess what's the next highest? There's a 92 in
2024.
6 in 2024. So 2024 is number 2.
Yep.
2023 is number 1. So what is the current number 3, I wonder?
Oh, yeah, good call. Maybe 20. Oh, I see 2016, 102. I think it's the only triple digit one. Oh, that's August. Sorry. I'm looking at the wrong one.
Right. It looks like it's 2020.
Wow, interesting.
So if that is the highest in this data set, then you have in first place currently 2023, then 2024, then 2020 coming in at 96.
Yeah, so that would, and yeah, you would read that as 0.96 degrees Celsius difference from, yeah, like 1951 and 1980.
And there's
yeah,
quite a jump. There's quite a jump between, you know, the current second place and the current third place, which makes it feel like the likelihood of you know, our current year, 2025, inserting itself as third, there's more room, right? I don't know what the data science term for this is, but there's a wider gap there, right?
Yeah, definitely. And also, if you look at the other tab, so the part of where I didn't do enough homework and I'd like to do more of is that there's a lot of other data sources that look at this exact thing, but maybe different intervals. So this data source right here is looking at temperatures on a day-to-day basis, and I think they update this like every day. And if you notice on the right-hand side for the legend, you'll see like a solid line that says 91 to 2020, 1981 to 2010. So there's actually similar comparison points or ranges that, you know, the base case for the main data source is between 1951 and 1980. And you can see that, yeah, that red line that you're hovering over is 2025, which is coming in at third if you look at compared to the other months.